Listen, stop burning bridges. See, a lot of times people burn bridges with other people, other entities, as well as themselves. People don't look at it from an angle of you can burn a bridge with yourself. But you got to understand, burning bridges is one of the #1 ways that people have bad credit. Let me explain. So I was able to take my credit from 300, which is the lowest you can ever have, all the way to an 802 plus by following these 7 simple habits. Once you understand these things, then it'll put you in a position to where you have great credit and you can control your credit. But #1, just stop burning bridges, because the first thing is understanding that you may have to get a cosigner or be added on someone's account as an authorized user. For me, it was getting a cosigner. So if you don't have any credit at all, that's where the 300 comes from. That's the lowest possible credit score that you can actually have. Well, me with no credit, the first thing that I did was I ended up getting a cosigner. Now, it wasn't my plan to be building credit in that process. It just worked out that way. So I had a car. This particular car was paid for because my brother had an extra car. He was like, hey, if you learn how to drive this stick shift, it's yours. I figured it out, learned how to drive it. He taught me. Then I had to practice by myself, figured it out, learned how to drive it, had that car, got into a wreck. That car got totaled out. So now I needed a car. Well, I had a job, but I didn't have any credit, so I needed a cosigner. My brother looked out for me again. I thank him to this day. Got me a car because he co-signed for me because his credit was good. He had some good things going on in terms of his credit, ability to make on-time payments. So he co-signed for me to get a car. Him being my co-signer, it was just my responsibility to pay for the car as well as pay for my insurance, etc. Now, because I don't burn bridges and I wanted to keep my word, I basically said, you know what? I need to make sure I'm making on-time payments. Thinking about credit wasn't even a thought of my mind. I was just wanting to make on-time payments, knowing that my brother had co-signed for me. So I didn't want to have anything to fall on him or affect him because he put his name down in order for me to even be able to get the car in the first place. Very important. So me making those on-time payments not only helped me build my credit, it also helped him because he was the co-signer on the credit, so it was a win-win scenario. Now, everybody doesn't have that story. I hear different horror stories of how people have co-signed for their own children and their own children damage their credit. Me, I took care of the payments. Those payments benefited him as well as benefiting me. And that's one of the things that helped me a ton when it comes to building my credit. #2, keep your word. What I said earlier, making on-time payments, paying things on time is a representation of you keeping your word. It's a representation of you not burning bridges with other entities. Because when you sign on that dotted line, you're pretty much agreeing to pay whatever the terms are. That's just the fact of the matter. So keeping your word allows you to pay on time, overtime, and that helps to boost your score long term. So just understanding the ability to keep your word and not burning the bridges with other entities, banks, lenders, etc., can help you with your credit. That's #2, keeping your word. #3, you got to learn to walk on water. What does that mean, to walk on water? It's basically understanding that you have to become your own personal guarantee. It's a term in business credit known as a personal guarantor, basically where your personal credit is what opens the door to you being able to build business credit. Well, if you had an authorized user or if you had somebody to co-sign for you, you do need to position yourself to be able to fend for yourself, self-approve, personal guarantee yourself. Now, for me, and this was still not me thinking from an angle of credit, but this is my exact journey. For me, I was like, okay, I no longer wanted the car. So the car that he co-signed for me was an Oldsmobile Alero. It was a sporty kind of Oldsmobile in that time, and I liked it. I was like, you know what, I want that Alero. So I got an Alero, made the on-time payment, but it came to a place where I was like, you know what, I don't want this car anymore. I had fun with it, did, different things to hook it up, etc. But I was like, I didn't want this car anymore. So I just had a bright idea. You know what, I've been making on-time payments. Let me just go to the dealership and see if I can get another car on my own. Just wanted to see. Now, I had a good job, and I had some work history, and I had the ability to make on-time payments, obviously, because I've been doing so on this car. Even though I had a cosigner, I was the one making on-time payments. I said, you know what, let me go ahead and see if I can get a new vehicle. Went up there to the dealership, didn't have to do anything but just sign, allow them to take my car as a trade-in, I left the lot with a car. Now, what this did was allow me to walk on water. So I was able to not have a cosigner. So my brother no longer was listed as the cosigner. That account was closed and paid for, didn't hurt his credit, and it showed up as, the car had been paid, as agreed, basically. But now I'm walking on water because it's all me. It's all on me to make sure that the payments on this new car are on time, because this affects me and only me. But I already had a good habit of making on-time payments with a previous car, so it was nothing different. And the payments weren't too far off from one another. It might have been an extra $100, give or take. And this is because it was considered to be a luxury sport car and had the dark gray leather interior, things of that nature. It was an Impala LS. I really like those Impala LSs. That's what I went in there for. I told them I wanted leather or a sunroof that had leather. I loved that color. I was out of there. And then, had me a new vehicle, but I paid that on time, but I was doing it myself. So that's me basically guaranteeing myself based on my previous history, based on my ability to make on-time payments, having income coming in. All of those things added up and allowed me to walk on water. So you have to get to a place to where even if somebody signed for you as an authorized user, you have the ability to say, you know what, I appreciate that, but let me see what I can do for myself. Now, you don't have to remove yourself as an authorized user if you're on a credit card, if it's somebody you're connected to, family member, etc. But if it's a cosigner, then you definitely want to position yourself to shift from having a cosigner to you being able to sign yourself. That's a big deal. So understand that. Number 4, getting new trade lines. So getting new trade lines basically means new accounts. So me getting that new car, the account is getting a new trade line. But it doesn't have to be a new car. It could be you getting some type of loan, personal loan, because now you want to build a track record for just showing that you had the ability to make on-time payments over time and pay things in full, etc. It could be you getting some type of revolving account. More details on that later. But whatever it is, new trade lines show that not only have you done it in the past, you had the ability to continue to do it long term. And now it's showing good recent payment history, but at the same time, it's showing that you have a history of good on-time payments as well. So new trade lines play a significant role. And by trade lines, I don't mean you buying a trade line from someone else. You're establishing good accounts. That's all that is on your own personal credit. A lot of times people think they have to buy a new trade line. This is not that. I'm talking about you just having good established accounts for yourself that you pay on time and practice that good credibility, not burning bridges, that strategy. Number 5, earn additional income. Now, you want to always be aiming to earn more income, because more income makes your ability to pay things on time, over time, excellent. Because if you have more income, it's easier for you to make on-time payments on the items that you have, whether that's a car, whether that's a loan, whether that's anything that you sign your name on. So you having more income is a key piece to being able to make sure you're doing it in a way that doesn't put you in a bind. Most of the time when people start damaging their credit is because income has been altered in some way, shape, form, fashion. Now, I know that things happen in many cases and certain things aren't guaranteed, jobs, business, etc. But I always trying to position yourself to earn more positions you to also have great credit, and getting yourself to that 700, 800 plus long term, stacking these tiny habits on top of one another. Number 6, pay things off in full. See, it just looks good on your profile when they see that you opened up a loan and you had the ability to pay something off. Stick to what you said. Stay committed to the process and see it out paid in full. Now, I am aware that sometimes when car notes get paid in full, it drops your score temporarily due to the fact that you now have a closed account. But when they're looking at the details of your credit report and they see that you had the ability to pay on this thing for 3 years, 4 years, 5 years, it helps your credit. Now, this is not to the person who pays off their cars in cash and, doesn't have any car notes. I love that strategy as well. I salute it. But if you do have a car note and you had the ability to pay it in full, then it does strengthen your credit profile, hands down. It was even a situation where I had to help my moms, and she had like a balloon payment built on the back end of a vehicle. And I always think in solutions. So it was a scenario that happened. I don't know if I end up seeing something in the mail, she ended up telling me, and basically they were saying that she had to make this big lump sum payment at the end. I still, to this day, don't know what that was about. I think it's some type of balloon payment towards the end, to where it was a lump sum payment that had to be paid, or they can take the car. So I saw and found out that that was the issue, and I was like, okay, let me jump into solution mode. I'm young at the time, early 20s, and I was like, okay, let me see what I can do. Again, didn't burn bridges, had good credibility in different places. Went to this particular bank I had recently. It was a credit union, to be more specific, that was connected to my job at the time. And I was like, hey, I need a loan for this amount. Yada. The amount that would have been a balloon payment at that time was, let's call it $4,000. Could have been $3,000, give or take, but I had the ability to go into that bank. They loaned it out, hassle-free, based on my work history, based on my job, based on my, ability to make on-time payments on things. They gave me the loan in no time, same day probably. And now I was able to pay that balloon payment off on behalf of my mom and keep those payments on time, because the payments for that might have been, let's just say, $200 a month. So now paying that on time over time was a separate loan that was also being paid on time over time. And then eventually it no longer exists because it got paid in full. So at this point, I had a paid off car loan and still was doing certain things that proved my credibility. And this alone positioned me to have that 700 plus, because I had a track record for on time payments. So having a new trade line is one thing, but the ability to be able to pay things off in full can strengthen your score as well. And last but certainly not least, because I haven't spoke a lot about this, but understanding that when you have new accounts, and credit cards being one of them, credit card is a big key. And I say this to the end because one of the main things about a credit card is making sure that you have the ability to use it, pay it off. Use it, pay it off. Carry a low balance. Understand the low utilization. Low, by my definition, is less than 5%. You want to know what day they're going to report to the credit bureaus, because if you know what day they report to the credit bureaus, now you know what day you need to have your balance as low as possible by. If you do that, now you position yourself to get higher credit limits, because what happens is with credit cards is you get the low utilization, but now they trust you with more money. And they say, you know what, this person has been paying on time. They're keeping their balances low. This is the type of client that we like. We can trust them with more money. And now your credit limit go from 1,000 to 2,000 to 4,000 to 10,000. All because you continue to pay things on time. Speaking from experience. Again, this is my segue, my journey to where when I looked up, I had 800 plus credit on multiple accounts, 793. And then even beyond that, going further, all from these tiny habits. So if you implement these habits and work them into your system and understand you don't want to burn bridges, whether that's with someone else, whether that's with another entity or yourself, now you position yourself to have A1 credit and the ability to get and qualify for different things, because you got a lot of substance on your profile. Not just a number. They look at your profile and you have substance associated with it. Of course, there are more things that took place after that. Had another car, got it paid off, ton of different things. But if you follow those habits, then it can work for you. You let me know which one was your favorite, or which one you plan on implementing down below, and which one you didn't think about, that you didn't realize could take your score to the next level. Share that down below. Like, subscribe, share this with somebody who you feel may benefit. Mr. Smith signing out. Salute.